Global markets reeled as headlines blared. Trump slaps sweeping tariffs on all Chinese imports. Beijing vows forceful countermeasures, sending a jolt through the financial world. Investors and traders scrambled to make sense of the sudden escalation, as uncertainty gripped every major exchange. The fragile truce between the US and China shattered overnight, plunging the world's two largest economies into open economic conflict. Years of delicate negotiations and uneasy ceasefires were undone in a single announcement, leaving both nations bracing for impact. Financial analysts looked grim. This was no mere political posturing. It was a declaration of economic war. The mood in boardrooms and trading floors turned somber, as experts warned of ripple effects that could reach every corner of the globe. The move sent shockwaves far beyond Wall Street, raising urgent questions about the future of global commerce. International markets tumbled and investors braced for a period of prolonged volatility. For months a tense calm had prevailed, but pressure was mounting behind the scenes. Negotiators worked late into the night, hoping to avert disaster, but the underlying tensions proved too great to contain. Trump's supporters cheered his tough stance on China, seeing it as a bold move to protect American jobs and industries. Meanwhile, critics warned of dire consequences for American consumers and businesses, predicting higher prices and disrupted supply chains. The late-night announcement confirmed the worst fears. The trade war was back, bigger and more unpredictable than ever. Newsrooms buzzed with speculation, and uncertainty spread through global markets. Lawmakers in Washington scrambled to respond. Some praised the boldness, others decried the recklessness. The political divide deepened, with heated debates erupting over the long-term costs and benefits of this aggressive strategy. In Beijing, officials responded with outrage and defiance, promising to defend China's interests at all costs. The Chinese government vowed swift retaliation, signaling that this conflict would not be resolved easily. Diplomatic channels fell silent as both sides dug in. Backdoor negotiations stalled, and hopes for a quick resolution faded as tensions hardened. This escalation marks a pivotal moment. The new tariffs cover nearly every product shipped from China to the US, from electronics to everyday household goods. The sheer scale of the tariffs is unprecedented. It's not a targeted strike, it's a full-scale economic assault. Factories slowed production, retailers braced for shortages, and economists warned of a looming slowdown. The implications are vast, touching everything from iPhones to sneakers, and threatening to raise prices for millions of consumers. Everyday Americans could soon feel the impact at the checkout counter. Even the global supply chain itself is at risk, as companies scramble to reroute shipments and rethink sourcing strategies. The world's interconnected economy faces a major test. As the dust settles, the world wonders, is this the start of a prolonged economic Cold War, or a high-stakes gamble for a better deal? The uncertainty is palpable, and the consequences could be felt for generations. The stakes have never been higher. Every decision, every announcement, now carries global weight, with billions of lives and livelihoods hanging in the balance. The next moves will shape the global economy for years to come. The world watches, waiting to see who will blink first, and what the future holds for international trade. Trump's new policy is sweeping, representing one of the most significant shifts in U.S. trade strategy in recent years. It introduces a blanket tariff on all Chinese imports, affecting every product category that enters the U.S. from China. Unlike previous targeted tariffs that focused on select industries, this measure hits everything: clothing, toys, electronics, machinery, and more, touching nearly every aisle in American stores. The administration claims it's about correcting trade imbalances, protecting American jobs, and punishing what it calls unfair Chinese practices. The logic is simple: make Chinese goods more expensive, push companies to reshore production back to the US, and pressure Beijing to negotiate better terms. But, in reality, tariffs are paid by American importers, who must either absorb the higher costs or pass them on to consumers through price hikes. Prices at stores like Walmart and Target are set to rise, squeezing families and businesses alike, and making everyday essentials less affordable for many. For companies relying on Chinese components, production costs soar, threatening their competitiveness and potentially leading to job cuts or reduced investment. This marks a sharp turn from decades of free trade, betting that short-term pain will yield long-term gain for the American economy. The big question remains: can the U.S. economy withstand the shock, or will the costs to businesses and consumers outweigh the intended benefits? The world is watching closely and bracing for ripple effects that could impact global markets and supply chains. The outcome is far from certain, and only time will reveal the true impact of this bold policy shift. The US isn't stopping at tariffs. Determined to maintain its technological edge and protect national interests, Washington is taking a multi-pronged approach. Washington is tightening export controls, introducing new regulations and restrictions on sensitive technologies. This means blocking Chinese firms from accessing critical American technology, from advanced semiconductors to cutting-edge software. The goal is clear: slow China's tech rise, protect US security interests, and maintain a strategic advantage in innovation. In response, China retaliates with its own tariffs, targeting American agriculture and key political constituencies, aiming to pressure US leaders. The message is unmistakable: hurt us, and we'll hurt your base, making the trade war personal for many Americans. The tit-for-tat escalates. Each move is met with an equal and opposite response, fueling uncertainty in global markets. China also threatens to restrict rare earth exports, which are vital for US tech and defense industries, raising the stakes even higher. Both sides are weaponizing their regulatory powers, making life increasingly difficult for each other's companies and disrupting business as usual. US firms in China now face new hurdles, from regulatory crackdowns to sudden inspections and shifting rules. Meanwhile, Chinese firms in the US face growing scrutiny, investigations, and outright bans from key sectors. Multinational corporations are now pawns in a high-stakes geopolitical chess match, forced to navigate an unpredictable landscape. The rules can change overnight, and no company is truly safe from the fallout or the shifting tides of policy. The trade war has evolved into a battle for technological and economic supremacy, with both sides determined not to back down. The stakes are enormous: control of the future, dominance in innovation, and influence over the global economy. The world's supply chains hang in the balance, as every escalation sends shockwaves through industries and economies worldwide. For American businesses, the trade war means uncertainty and rising costs. Companies built on Chinese supply chains now face impossible choices: absorb losses, raise prices, or find new suppliers. Many small businesses and manufacturers are squeezed, with layoffs and closures mounting. Farmers lose their biggest customer as China retaliates, driving down prices and fueling bankruptcies. On the Chinese side, factories lose orders, workers are laid off, and local economies suffer. Multinational giants like Apple scramble to diversify supply chains, but shifting production is costly and slow. The old model, manufacture in China, sell in America, is broken. The disruption is global, and the pain is widespread. Workers and entrepreneurs on both sides are caught in the crossfire. This conflict is about more than trade. It's about national security. US officials argue China's economic ambitions are tied to military power, citing the Made in China 2025 plan. Tariffs and export controls are seen as tools to block China's technological rise and protect US interests. The tech war is front and center. Washington pressures allies to ban Huawei, citing espionage fears. By restricting Chinese access to US tech, America aims to slow Beijing's advance in 5G and semiconductors. China sees this as an attempt to contain its rise, fueling nationalist sentiment and defiance. Trade disputes become zero-sum contests, shrinking space for compromise. The risk: a decoupled world, with rival tech standards and fractured cooperation. Security concerns now drive economic policy. The consequences could reshape the global order. The trade war's most corrosive effect is uncertainty. Businesses delay investments, unsure if tariffs will rise or supply chains will break. Financial markets swing wildly. One tweet can send stocks soaring or crashing. Ordinary people feel it too. Retirement savings fluctuate, job security erodes. Companies shift from just-in-time to just-in-case, building costly inventories and diversifying suppliers. The transition is messy and expensive, adding complexity to global business. Consumer confidence drops as families worry about jobs and prices. Lower spending leads to more layoffs, fueling a vicious cycle. The old era of seamless global trade is over. The new normal: volatility, caution, and constant adaptation. US ports are on the front lines. Cargo volumes drop, jobs are at risk, and shipping lines cancel sailings. The disruption ripples through global logistics, raising costs and slowing deliveries. The trade war throws sand in the gears of world commerce, making supply chains less reliable. The central question: Will tariffs force China to negotiate, or push it away for good? Some argue economic pain will bring concessions, others warn it will fuel Chinese self-reliance and a permanent split. The risk: a fragmented bipolar world order, less prosperous and more prone to conflict. The intended leverage could instead cement a great divide. The outcome will define the global economy for decades. The world stands at a crossroads.